Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing stocks with ex-dividends next week. So next week is May 28th through the 1st of June. So what we're going to be doing is screening roughly 40 stocks from a rating of 5.0 being highly recommended all the way till we'll say around 4.0 will be in the recommended range. And of course, as I have it up on my screen right now, the DARS rating criteria. Basically, the strength of the stock, you can pause it, read through this if you'd like. And then here is how to interpret the DARS rating. So we're basically going to be taking everything 4.6 to 5. We may go down a little bit lower into the 3.6s and above, but we'll go ahead and see how that goes. We're going to be screening these stocks for a price to earnings ratio less than 25, dividend yields greater than 2%, increasing revenue, increasing net income, increasing free cash flow over the last 10 years. I get those numbers based off the S&P 500 average. So if we take a look here at my ex-dividend stocks here, the S&P 500 is currently trading at a 24.8 PE ratio, and the S&P 500 dividend yield is currently at a 1.83. So I basically round 24.8 up to 25, and S&P dividend yield 1.83 up to 2%. And here you can just kind of see the history of it all. So let's go ahead and jump over here. If you guys would like to screen for yourself, you guys can go to dividend.com, create a logon. That'll allow you to have access to the DARS rating. Click on X dividend dates, enter your dates. For this video, we're doing 28 May through 1 June. I select common shares, hit that search, and now I have it sorted by the DARS rating system. So here, I'm just going to go ahead and begin entering the ticker symbols over here on Y charts. And that's going to allow me to just kind of populate these. Now, NBTB. So what I'm going to do is take all these from a 5.0, and I'm going to go ahead and go all the way down. Boy, there's a lot of 4.4s. So right here, 4.4, the last one is Nike. And that looks like a very sizable chunk right there. So I'm going to go all the way from 5.0 to 4.4. So that's going to give us a little bit of the highly recommended and a few of the recommended in there. So I'm going to go ahead and pause the video because this process takes about a minute or so, a couple minutes. I don't want to have you guys sitting here. So I will be right Okay, and we're back. So while I was doing this, you can see here the list is ginormous. We had Nike in here, Kellogg'S, Lockheed Martin, lots of financial companies, and see Home Depot is in here. So majority of it is a lot of financials coming up next week on ex-dividend. So there we are. We have all the stocks that are pulled over from dividend.com. I'm going to go ahead and expand my Y charts, zoom in just a bit here. But first, I'm going to go ahead and begin deselecting these from the bottom. You can only screen 12 stocks at a time. And I'm going to go ahead and begin deselecting these. At the same time, I'm going to go ahead and select PE ratio here. And then begin deselecting these. As we hit 12, you're going to see that the numbers over here on the right begin to appear. There they are. So again, we're looking for a PE ratio less than 25. So that's actually right here. All these stocks here that we have selected have a price to earnings ratio less than 25. So I'm going to go ahead and deselect all of those and move on to my next 12. 2, 4, 6, 8, 10, 12. There we are. So again, here we are. We go through here. Pink at the very top. So now we match it up here to Dow DuPont, which is in the center-ish. So just remove it here from the center-ish of my list. Old National Bank Corp at the top. And that gives us everything in there. You guys can make your own adjustments. If you guys want to go a little bit lower, say a PE of 15 and below, you guys can do that as well. Just screen your stocks based on whatever your criteria is. So for this example, I just kind of base it off the S&P 500 and then begin kind of screening these stocks based off that, And instead of rounding up on that dividend yield, you could actually round down to 1.5. We may end up doing that just depending on how many stocks we have here, but it looks like we're going to have a number of stocks that kind of make it through. They're making it through the PE screening process here, but we're knocking out here. So I'm going to go ahead and actually kind of keep you guys here on the line. Now, why do I do the screening process every single week? Well, I'm not going out there and looking to invest every single week and just buying stocks and stocks and stocks. But at the same time, I like to, do my research and kind of research different stocks that I normally wouldn't hear on, the news or the media and stuff like that, any websites or other YouTubers out there. A lot of the times, these stocks here, Nike, for example, Nike is a pretty common one. That's a very high PE ratio. That's actually surprising. That could just be due to them adjusting the way that they're reinvesting their earnings back into the company, which could be just causing that to kind of go up. But for the screening process, I don't look at names. I'm just looking at the financial metrics, and it could be off, and that's completely fine. But let's see, 8. And next one here, so I go ahead and deselect PE ratio, and now I'm going to look and do dividend yield. So that's going to load up all my dividend yields. Again, going to go ahead and remove anything with a dividend yield less than 2%. So if you have a 2% dividend yield and you're investing in a stock, say with $100, at a 2% yield, that's making back $2 per year or 50 cents per quarter, depending on how often your stock pays out. But most of the stocks are quarterly paying stocks. Now, if you have something that pays out monthly, you just take your $2 divided by 12, and that would give you what? I don't know the math there. And without busting out my handy dandy calculator, we could have actually kept Home Depot on there. That kind of trades. I'm going to go ahead and add it back in. That's so close to 2%. I'm going to go ahead and keep it because it does vary by day depending on the price of the stock. So by doing this process, I get exposure to stocks that I would probably never really consider adding to my portfolio. Whoops, there we go. And that's not how you spell Lowe's. I'm not, I don't even know what company that is. But I enjoy this because not only does it kind of, a lot of these stocks here besides Home Depot, Kellogg's, CNB Financial, I think I've kind of looked at that one in the past. Those are probably the only common names that I've seen are Dow DuPont. I think I had removed that one earlier. But a lot of these are not very common. So I like getting that exposure to different stocks, and I can kind of research based on what I end up with at the end, what my survivors or my stragglers are. Then it's 1.95, I think is my cutoff. And where was I? I may end up pausing my video here. Yeah, I'm going to go ahead and... Okay, and we're back. So these are all stocks that have a PE under 25, dividend yields over or near 2%. So we still have a good amount remaining, probably around 15-20 right there. So next, I'm looking at revenue, net income, and free cash flow over the last 10 years. Now, at this point, I just select one at a time. You can see here, if you don't change the data format, you're going to get the actual numbers. Here they have $1 million in revenue, they have $1 million in net income and free cash flow, so you can kind of see the numbers there. I like to see these in percentages, so I go over to data format, and here, for example, this shows me that over the last 10 years, this company's actually lost, free cash flow, net income, and revenue. So I'm going to go ahead and just automatically any sort of negatives. I don't like having negative companies at all. I've actually done really well doing this whole screening process in the past. A lot of the stocks that I had invested in the past. Free cash flow is where your dividend's going to be coming out of, other than your earnings. If they fall on hard times, having that free cash flow is really going to help them out in order to pay and not having to cut that dividend. So that's kind of the whole process why I like these numbers being positive. I don't like seeing negative numbers. And then also when I go check the balance sheet, I don't like to see a whole lot of debt or any debt. I like to have them profitable. So all of these stocks are profitable companies. They have all rising net incomes over the last 10 years. They don't have any decreasing free cash flow. They're not like bleeding money out somewhere. So it's pretty easy to track. They've had good progression. This one, Kellogg's, for example, you can see, it swung down very hard after 2014, and it's barely recovered 10% net income over the last 10 years. I'll keep it, but there are probably better stocks out there. And Home Depot here. Home Depot, very good free cash flow. Year over year, just increasing year over year, along with that net income. Their revenue is very, growing very steady, but their net income has been growing in the double digits year over year. So that's very great looking there. So here, we're left with 2, 4, 6, 8, 10, 12 stocks. So here, we can actually look what stocks are currently trading with a yield of a price. Let's go back to data format, original. So here we have price over yield, price over yield, price over yield, price over yield. A lot of these are going to be, there's a yield of a price. That could just mean, let's see here, price over yield, yield of a price, and yield of a price. Kellogg's took a dive recently, nearly touching $56, and then rose all the way back up to $61.52. Kellogg's is one of those consumer, staple brands that it's been on the media quite a bit. So stocks that people are going to be, they're thinking they're going to have hard times are those, Campbell's Soup, Kellogg's. I just posted on Facebook, some of these old staple stocks, Procter and Gamble, Kimberly Clark. A lot of these competitors, Walmart, Kroger's, Costco, they now have their own brand names. They don't need to sell Campbell's Soup. Walmart can sell their own great value brand. Kroger's can sell, Fred Meyer's Kroger's, they can sell their own Kroger's brand. Costco, they have their brand as well. Kirkland. So they don't need to rely on selling Kellogg's, Campbell's Soup, Procter and Gamble products. If they don't, if they try to undercut the Walmarts and the Costco's, they're just going to stuff their items in the back of the store where no one's going to see them, and that's going to kind of force people to buy great value unless you really want to head back to the back and buy those brands, if you're brand friendly. But anyways, let's see here, Royal Caribbean, that's high. That decreased a lot since January. The correction that we had in January, I bet the investors there, they jumped back in, brought the price back up, but then ever since it's just been dipping. It may have bottomed out here at the 104. It may be on a good rise right now, but that's one that requires research. So here, Home Depot. So at this point, let's go ahead. What are we at? We are at 12 minutes. So we do have a number of stocks here. What I'm going to do is go ahead and open up all the stocks here that we've actually kind of gone through and screened here on the left. And I'm going to open these up in another tab. And now we're going to go through them and see which of these has been paying out dividends for, say, 10 years or longer. Because if you're a dividend investor and you want to invest for the long term, having, we screened it for the financial metrics. The next thing I like to look at dividend stocks for is how long have they increased their dividend and how long have they continued, just paid a dividend in general, and have they ever cut their dividend during times, hard times during that recession. And we'll see some of that here in just a minute. So I'm going to go ahead and continue opening these up. And we have Kellogg's there. I know Kellogg's paid out dividends for quite a while. I believe RCN. Let's see here. RCL. Okay, there we are. And then Home Depot. Okay, so let's go ahead and expand this window up. Starting at so we have NBT Bancorp, ticker symbol NBTB. This is a regional Northeast banks, 40% payout ratio, 5 years dividend growth, 1 year there. I'm just going to go ahead and take a look. I'm going to go ahead and remove anything with no dividend growth. Looks like they've continued to pay out that 23-cent dividend over the last several, since the recession of 2007. They increased their dividend and then had held out that dividend. So it's not a bad stock to increase over the long term, but with inflation and stuff like that, having that increase is kind of like getting a rent increase. I like to have increases year over year. And see if we can find one. There's a 10 and a 13, or 11 and a 13. So I'm going to go ahead and move my 13s up to the top and my 11 up to the top. I'm going to go ahead and sort these and remove the ones that have not increased their dividend year over year. And we have 6, and we have a 7, and we have a 5, 5, 2, 5, 2, and a 1. Okay, so starting at the top, we have Kellogg's Co. Processed and Packaged Goods, ticker symbol K. Very good payout ratio. I would consider anything over 60% as a good payout ratio. That means if their earnings fell by 50%, their payout ratio would double to, say, 48 and 48 is 96. So they would still be paying out, their earnings. They would be paying out to their shareholders, but they still have that free cash flow in the back to also tackle on top. So the last time they actually stopped growing was back in 2005. So here towards the bottom, we can see back in 2005, from 2000 until 2005, they never decreased their dividends, such as General Electric, but instead they just locked it in at 25 cents per share. And year over year, they just kind of left it there until 2005, where they increased it to 28, and then 29, and 31, and then they've had those year over year. So what happened here? They did a stock split, 2 for 1. So for every one that you owned, they doubled it. So if you had 1,000 shares, you would now have 2,000 shares, and they give you that dividend increase, and then they just kind of locked you in. So anybody who was invested at that time, and not the day traders and such, those long-term investors, they basically doubled their share count and then increased their dividend and just kind of locked that dividend over the next almost 10 years. But they were basically getting double the dividend that they would have got. So actually Kellogg's is a pretty good stock there. I'm going to go ahead and leave that one there. Their ex-dividend is on May 31st, which is next Thursday, and you'll get paid out on the 15th of June. We have CH Robinson Worldwide, ticker symbol CHRW. Again, low payout ratio, good dividend growth. They've paid out since 2007, have had continued dividend increases. Here again, they did a stock split, 2 for 1, and continue to increase their dividend from that time. They kind of locked it in since 2001, it said. But it looks like they had these increases here. It looks like they've actually 2007. I'm not sure why it shows that they've. Yeah, this could be the data here. This number here could be incorrect. So they probably can. The dividend growth does look to be a bit longer. Arthur J. Gallagher and Co. It's an insurance broker. Ticker symbol AJG. I am sleep deprived. It's 1 in the morning, so I'm going to go ahead and cover the rest of these with the names, ticker symbols, ratios, dividend growth, and the ex-dividend dates. And then if you guys have any questions about any specific stock, let me know in the comment section below. I don't like to make these videos too long. I really need to get back to typing up my articles. I think that's the best way of kind of displaying these in a timely manner. I've just been working every single night, so it's crazy. So dividend yield here, payout ratio, actually lower than anything that we've seen. This is resorts and casinos, so similar to Wynn Resorts, this is another resort and casinos company. So Royal Caribbean Cruises, ticker symbol RCL, dividend growth 6 years, low payout ratio. Their ex-dividend is on Friday, June 1st. You will then get paid out on July 3rd. We have, let's see here, what was that, 5 years or 6? 6 years, okay. So in first place, we had Kellogg's. Second place, C.H. Robinson. Third place, we had Arthur J. & Co., Royal Caribbean Cruise. And then here, we have a couple stocks here with 5 years. I'd actually say those with the lower payout ratio would be, higher priority because they've all continued to have dividend increases. Now, these are all banks of some sort, all regional banks, and it looks like they all have ex-dividends on May 31st, so that is next Thursday. And then let's see, do they all pay out on the 15th? No, so a couple of these pay out on the 11th of June, and then the others pay out on the 15th of June. Home Depot, 5 years of dividend growth, very low payout ratio, under 50%. ex-dividend on May 30th, which is Wednesday. You'd then get paid out on the 14th of June. American National Bank shares, it's another regional bank. Ticker symbol AMNB, low payout ratio. Dividend growth for only 2 years since 2016. Bank companies, a lot of them locked in their dividend here. You can see the lock-in. They even missed the payout right there. This is always important to check out. Check out their, their history here. They did a stock split back in 1999, 2-for-1, continued to increase it, and then during that, up until 2008 when they had that crash, instead of cutting it, there's a couple stocks out there that actually cut their dividend or just did not pay a dividend altogether. This one, for example, did really well. They continued to pay out their dividend, whereas if we take a look at this one, let's see here. Oh yeah. They cut their dividend from 17 cents per share in 2008 all the way down to 10 cents and then kind of locked it in there for a couple years. And then during, they also did some special dividend payouts at that time. And here you can kind of see all that little mess right here kind of going on. So just interesting stuff there. And the one in last place is First Financial Bancorp, ticker symbol FFBC. It's again another bank. 1 year dividend growth, payout ratio 35.2. May 31st, which is next Thursday, is the ex-dividend. So you got to buy these on the day prior to the ex-dividend date, and then you would get paid out on the 15th of June. So that is it for this video. Just wanted to make it very short and sweet. So next week, stocks with ex-dividends next week that have PEs under 25, 2% yields or greater, increasing revenue, free cash flow, and net income are Kellogg's, ticker symbol K, C.H. Robinson Worldwide, ticker symbol CHRW, Arthur J. Gallagher & Co., ticker symbol AJG, Royal Caribbean Cruises, ticker symbol RCL, Midwest One Financial Group, ticker symbol MOFG, CATY General Bancorp, ticker symbol CATY, NBT Bancorp, ticker symbol NBTB, Home Depot, ticker symbol HD, American National Bank Shares, ticker symbol AMNB, and First Financial Bancorp, ticker symbol FFBC. So at this point, depending on what kind of investor you are, if you're coming a short term, say 6 months to a year or two, then the dividend yield or the dividend growth may not, you may not take that into account, or even the payout ratio, depending on if the stock looks like a great deal. But if you're a long-term dividend investor, you want those continued dividend growth. You want to have a low payout ratio because in times of recession and pullbacks and the market crashes, they may lose half their earnings, but their payout ratio will, say they decrease in their earnings by 50%. Their payout ratio would just double by 50%, or just double in general, and they'd still have a low payout ratio in comparison to, say, some of their other competitors, and they would be able to just continue to pay out those dividends until they recoup through that recession. So that is it for this video. If you guys have any questions at all, go ahead and leave them in the comment section below. If you just want to say hello, go ahead and say hello in the comment section. If you did enjoy the video, remember to hit the like button, and please remember to subscribe for future financial videos. As a friendly disclaimer, I am not a financial advisor or a tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, kind of showcasing some ex-dividends coming up next week that could be great long-term buy and hold stocks, or just kind of buy, wait for the recovery, or buy for the ex-dividend. So that is it. I will see you guys next time. Have a great day. Bye.